From Digital Asset Data, we have Mike Alfred, and this is definitely what I'm looking forward to, given that my background is finance. So,
thanks, Brandon. Can everybody hear me clearly in the back? Great. So I'm brand new to Colorado. Built my last company in San Diego, California, and the first time I ever got interested in finance was at Stanford in 1999. And, back then, tech stocks were trading like crypto was in Q4. So if anybody owned, Bitcoin or Ethereum and at the end of last year, it was sort of like buying InfoSpace and CMGI. And so I was trading these stocks in my Stanford dorm room. And one of the things you realize when you first buy your first stock, which for me was almost 20 years ago, is that information is critically important, right? So back in the late 90s, all of the quotes, right, for stocks that you would get on the public websites, they were delayed by 15 or 20 minutes. So you're looking up CMGI and actually the stock had moved 5% from when you bought it, but there was no sort of information unless you're using sort of a private, real-time data feed. So I realized pretty early on in trading stocks in the late 90s that data is critically important. So then fast forward, I graduated from Stanford in 2003, became a financial advisor, was managing money for individuals. And one of our clients, Dan Weeks, who ended up becoming our co-founder, he had about $1 million in his Hewlett-Packard 401k plan. So he was an engineering manager, had diligently saved over time, but couldn't figure out how good his 401k plan was compared to, say, any other plan. He couldn't figure out what the fees were. He couldn't figure out whether the funds were good. There just wasn't any data. And actually, back in 2008, if you went on Google, which is how most people sort of view the world of information, and you typed in Hewlett-Packard 401k plan, there was literally a void, right? There was nothing there. So my brother Ryan and I set out in 2008 to convince the government to give us data on all the large U.S. 401k plans. And so we started a process. We started sending Freedom of Information Act requests to the government. At first, they weren't willing to give us some of the data we asked for. Eventually, after harassing them for about 3 to 6 months, they started providing the data we needed. We actually built a rating system to score every large retirement plan in the U.S. algorithmically. So we're factoring in fees, factoring in the quality of the mutual funds. We're factoring in things like the match structure. And what we built was a 0 to 100 score. So if you worked at HP, you could see that the rating was 72. And if you worked at Amgen, the rating was 70. And over the course of 8.5 years, we built that business up to a little over 10 million in revenue, mostly from large asset managers like Fidelity, BlackRock, PIMCO, et cetera. And then we sold that business in 2016. So that was my first kind of experience realizing the power of data and even the power of public data. Like, this is data that the government had that had just never been accessed and never been sort of put into the economy in any meaningful way. So then what happened was, I'm working for the company that bought us in 2017, and we start to see what's happening in crypto. So my brother, who was my co-founder, left to found a crypto hedge fund in New York called Distributed Global. And that fund now has about $100 million in tokens. And he started calling me last fall. He said, listen, Mike, there's all of these crypto hedge funds now managing tokens, and we don't have any data to make decisions, right? So our analysts are going to CoinMarketCap, scouring the internet, trying to figure out what's going on. We're managing our portfolio in an Excel spreadsheet, right, or a Google Sheets. I mean, there's a $100 million crypto fund with billionaires as LPs, and they're using an Excel spreadsheet. It speaks to how nascent this industry is and how much infrastructure is needed. So obviously, I view this as a huge opportunity. It's very similar to what we did at Brightscope back in San Diego starting in 2008. It took us 8.5 years, except Brightscope was focused on the U.S. retirement market, which there's really only 40 or 50 companies that matter. It's Fidelity, Schwab, Vanguard, T. Rowe. The crypto market, in comparison, is global. It potentially is going to eat a whole bunch of other industries over time. Obviously, there's a need for similar types of services. So that's what we're building here in Colorado. We started in January, a standing start. We had literally not written a line of code in March, and we're building effectively what we view as sort of the enterprise tier 1 data player in the crypto space. And so I'll tell you a little bit more about what that sort of means to us. But we think it's a huge opportunity, and we're going to be hopefully hiring hundreds of people here in Colorado over the next few years. So this gives an idea, this chart here, of how we think about the market. So obviously if you're focused just on crypto where it is today, this is like focusing on V1 of the internet in 95. Like, it was really hard to see how the internet was going to sort of eat other industries, but I think this should give you an idea of where we think it's going, right? So, like, obviously a lot of people that are really active in derivatives are really interested in crypto for obvious reasons. Real estate is particularly interesting to me. I'm actually investing in a real estate tokenization platform. You probably heard about the St. Regis and Aspen being tokenized. That's going to trade on the Templum exchange. You're literally going to be able to buy in 5 years a whole bunch of tokens that represent ownership in a real building, right? So a building that you walk by in downtown Denver will be tokenized. You will be able to buy in a token some sort of ownership interest in that. And the servicer, when those distributions get paid out, let's say it's quarterly, they're going to airdrop a stable coin into your wallet, which represents the cash value of that dividend. That's where the market's going. And so what's interesting about that is you have multiple dimensions of data there, right? So you have all the data about that stable coin, because you need to understand whether there's risk inherent in the stable coin. You have all the data about the real asset itself, right? So you've got to be gathering data on who the tenants are, whether they pay on time, what the distribution looks like, what's the financials of the building. But then you also have to look at the underlying infrastructure in the token that's actually being launched. So is it an EOS token? Is it an Ethereum token? Is it a NEO token? Is it a Hashgraph or Tezos or something in the future we don't even know about yet? There's fundamental risk in each one of those blockchains that as an investor you would need to understand when you buy that token, right? So this is where we think it's going, and so we're building a company that's going to gather data about all those dimensions and put it together in a meaningful way so that investors can make better decisions. So how is it different? Like I just alluded earlier to what I experienced in the late 90s with 15-minute, 20-minute delayed quotes. Crypto data is a wild new sort of space, right? So these exchanges, they're trading 24/7, right? The blockchains are running all night, overnight, through holidays, right? The data fields that you would need to map for each blockchain are actually different. So trying to line up the EOS blockchain data fields next to the Ethereum fields is actually really challenging, but if you want to build an analytical platform in this space, you have to make those data points kind of talk to each other. So you could say run a query, show me all wallets that have these 7 characteristics across these 25 blockchains, right? That's the sort of thing that our users are going to want to do. We think, Bloomberg and Thomson Reuters and those guys, they're going to be late in this space because it's really hard when you're running a big business to really focus, and there's so much data here and it's so complicated that we believe, have to build a really dedicated, concentrated team to go after it. And again, so early, so there's no sort of standards around this. We actually think we're going to create some in the process of doing this, right? So exchange data, that's one of the key pillars. We're now tapping into about 120 retail exchanges. Each exchange is very different. Some of them, like BitMEX, are doing all kinds of crazy things with derivatives and leverage. Some of the retail exchange have a lot of wash trading. The APIs are still very new, and so we're trying to figure out how best to work with the exchanges, but so far, so good. Some of our teammates in the back here are working with our engineers to identify the right data points to be pulling over time. And so what we're doing is, obviously we want to pull down as many asset pairs, as much data historically as we can, and then we're putting all that data into a time series database so you can understand the trading of these assets over time. On-chain data, super interesting, mostly because it's so new and most people don't really understand it yet. But we're doing a couple things here. Obviously, we're running the live nodes, right? So we're running multiple nodes on every blockchain. So if you want to have 24/7 uptime, you can't just run one node on Bitcoin or Ethereum because routinely these things will go down. So you need 2 or 3 or 4 of them. You shouldn't just be running the nodes. You also have to basically take all the data out and put it in a separate database because you wouldn't want to run a complex query on a live node because it's sort of computationally inefficient. Whereas if you put it into a high performance database externally, then you can run some really interesting analytics on it, right? So that's one of our big challenges is like we're going to be running hundreds, if not thousands of nodes in the coming years. We need to keep the infrastructure up to run all those, and then we actually need to basically suck all the data out from the beginning of time so that we can build the analytical capabilities on top of it. So this is a unique area of data, right, for this space. Like unlike any other space before, you can basically follow for the open source projects all of the code development, right? So these project teams, they're selling their token and they say in their white paper they're going to do XYZ thing over the next 6 months or 12 months. Well, actually, if you're smart about it, you can actually just look at the code. You can look at the contributors. You can actually start to line up the metrics that the team has put out alongside the the actual code that's being written, so you can try to determine whether or not the project's on track. You might have been able to use that earlier this year to see that the EOS mainnet launch was going to be late, for example, and you would have sold some of your position at $20 instead of waiting for it to come back down to $5. These are very obvious things that you can do as signals once you have all the data. Again, we don't believe anyone in the world yet has all of this data databased in any sort of meaningful way, and so that's what we're working on. So the big vision, again, is to bring it all together, right? So this could be in the form of an interface that we provide. So for a small crypto hedge fund that has like 25 million or 50 million, they're going to want us to just put all this data into a database, put it into an interface where they can use it. The bigger banks and asset managers, the JP Morgans, the Goldmans, Cotus, like the bigger hedge funds that have 25 data analysts, they just want all this data flowing through some sort of analytical platform like Jupyter Labs where they can do their own data science work. They don't want to actually run their own nodes, right? So running hundreds of nodes over time is inefficient. There are a bunch of hedge funds that are individually doing this in-house right now, and they're spending $1 million in R&D, and almost all of them, when we say, look, we would sell this to you for 100 or 200,000 a year, they're like, we would deprecate our current process because we don't want to maintain it over time, right? So it's about building a base layer of data that has everything you would need to make decisions, and then you as a user of the data can move up the stack and do more interesting analytics on top of it. So we've come a long way in just 9 months. We're running at a full sprint with our 20 or so folks. And so we've got the exchange integrations running. We've got nodes, redundant multiple nodes with some infrastructure around that to automate that process running on 30 networks. We're pulling the GitHub data. We're pulling some data from Twitter. And we actually have this portfolio management app. One of the challenges as an entrepreneur in this space is, as you guys know, there's a lot of promises made from crypto entrepreneurs and not a lot of real product in a lot of cases, particularly with some of these early protocol teams. So if I raise $3 million as we did, and then I come back to my investors, 6-9 months later and say, look, we've done an incredible work. We built all this infrastructure. We're running all these nodes. And they say, well, show us. They're just going to see a bunch of data going across the screen. So we actually consciously decided to build an end user application to demonstrate what can happen when you start to put this data together. So the long-term vision is not to be a portfolio management solution per se, but we've got about 10 hedge funds, including one in this room. I won't mention their name. If he wants to identify himself, he can, but one of our users is in the room, and so far so good, it's going well. So the opportunity we think is broader though, right? So investor applications for this data are obvious, right? If you have all this data, you can make better decisions about which tokens to buy and sell. But think about sort of the infrastructure layer. If we're running all these nodes, we have all this exchange data. Let's say you're a new application developer, right? You've just raised $1 million in Silicon Valley, and you're building like a really cool wallet that's going to help consumers custody hundreds of tokens. Would you want to spend the first $1 million building the infrastructure, or would you just want to tap into an API that already has all the data you would need to power that? So we're already thinking about how do we leverage the infrastructure to go beyond our own applications and build something that can go much broader. Things like McKinsey, for example. McKinsey's going out and doing a $3 million project with the Bank of Japan, right? Or with the government of China or the Sovereign Wealth Fund of Singapore. They need a high quality data set in order to drive their recommendations to that sovereign about how they should regulate, how they should tax, how they should understand the space from a banking standpoint. So this is our team. On the far right, Kurt Fenstermacher, he's sort of like, I call him our secret weapon. He was like our 5th hire. He worked at Bridgewater, which is the largest hedge fund in the world, for 10.5 years. Just fortuitously met him. Like, I would have had to use a recruiter, but it turns out that his son goes to Cal Poly, where my former co-founders' kids have gone, and where he's now an entrepreneur, like helping other entrepreneurs get their company started. So I met him fortuitously. He did this exact type of work at Bridgewater for 10.5 years. He took all these data feeds from all these governments, macroeconomic data, ingested them into a central database, and then would drive decisions like buy or sell German bonds based on the most recent data, right? So when we were thinking about how to build this, we're like, okay, obviously we need to understand the investor use case for this. Who better to get than a guy who ingested data for 10.5 years at Bridgewater? And he's been a great part of the team so far. He's got a computer science PhD and a background in AI. You can see my other co-founders up there. I won't belabor the point. We got a great team. So we've raised $3 million. A great group of investors, folks you've probably heard of like Block Tower, Jump Trading, CMT, Alan Howard from Brevin Howard. It's a really great group, and we're actually out raising a Series A now. Assuming all goes well, we'll launch the sort of analytical part of the platform in the next couple months, and then we'll be off to the races monetizing. I should note that we have no token, right? So we didn't fall into the trap last year like everybody did of like creating a token even though they didn't need one just because it was an easy way to raise money. We raised money the old-fashioned way. We put together a deck, a model for how we could monetize this. It's a traditional enterprise SaaS business. We love crypto, but like we're not carried away with it in the same way that some of the other folks are. Like I'm not sure there's a need for like 1,500 cryptocurrencies, right? Like we're not making a bet on that. We're fairly agnostic as to whether EOS is better than Ethereum, which is better than anything else. Like I think EOS is probably a really great project. I know there's a lot of believers in the room, but like our only goal is to gather data from all of them, right? So an investor can understand what does the momentum look like on EOS. Is there more usage than there was last week, right? Are the transactions processing in a different way? Is the token trading in a different way than it was last week? We don't really care actually in the long run which one wins. We just want the best projects to win. And we think data will help drive a lot of those decisions. So that's it for my presentation. I don't know do we have 2 minutes for Q&A if there are any questions or? Go ahead. On the. Yeah, so I was just in New York a couple weeks ago and we're having a roundtable discussion that digital currency group put on. And we were talking about how protocol teams should have sold 50% or more of the Ethereum the moment they finished, their SAFT agreements. And so I think it's a very interesting area. Brandon right here in the back, if you want to raise your hand, we've spent a lot of time understanding the sort of inflation rate. We've spent a lot of time understanding the way these projects are funded, who the team members are. It's a big part of, we think, understanding the trajectory of the project. So I can't speak in great detail about treasury management per se, but it seems like a big opportunity.
What are your thoughts on having the investors, large investors, kind of level up in terms of learning how to control their own destiny? Related to the custodian management that I know a lot of hedge funds are looking for because that's a traditional model that they're used to.
Yeah.
Do you think we'll ever get to a point where people can actually own their own crypto by controlling the private key, even in these larger firms?
I don't think that's the way the market will go. So right now, the most sophisticated small crypto funds have like very complicated processes for how they use hardware wallets and multiple signatures, and more of those folks don't, even the good ones, don't really want to manage that. They're really hoping that like Coinbase is successful and BitGo is successful and that Northern Trust and JP Morgan come in. I think in a few years, like it's just like a lot of spaces. At the beginning, you have to be really technically sophisticated to use something new like this. But then within 5 or 10 years, first there's AOL, and then there's Google, then there's Facebook, right? And in this space, it's going to be similar, except there's probably going to be a lot of traditional banks and asset managers that come in. I mean, that's our bet. In the next 3 years, like the space will look dramatically different. And you'll see a lot of the names you already know and trust, the people you already bank with, people you already trade securities with, right? And so I don't think it's critically important if you enter the space 2 years from now to know a lot about how to maintain your private keys. I could be wrong, but I think I'll be personally transferring my crypto from wherever it is to Northern Trust if they decide to get into it because I trust them, right? Maybe that's.
Kind of again, almost back to the whole point of why crypto was invented.
I get it.
No,
there's a fundamental conflict between like all of these things. It's a tough one. I get it, but if my crypto's insured, then I'm not really worried. Like Gemini's announcement was really interesting to me. ICE entering. I know Josh back there is really bullish on Backed. Like these sort of safer ecosystems might be a way to create more sort of adoption of crypto, which I think is good for all of us, even if we really believe in decentralization and we want the space to democratize or create innovation that changes the space. So, yeah.
Business model. I know that it makes sense to go the fast route, but how are you kind of accounting for the complexity creep in the space? Like there's so much innovation occurring and you have like so many data feeds that you're going to have to integrate into your platform. How did you kind of model that out, or can you talk about that?
Sure. So we have basically 3 basic tiers that we've already kind of conceptualized. So at the high end, it's a JP Morgan, right, or Goldman, Target, a client like we served at Brightscope, right, when we had an average of about 350,000 per year per client to use the platform with the data, is either data feed or the interface. And typically what you see with the largest banks is that they just want the data, right? So they're like, we have a data warehouse, give me a feed that has these 1,700 fields in it, and I want it on this interval, and I'll pay you $542,000 a year for that if you just deliver it on time and then make sure everything is right. So that's one tier. Then there's like crypto hedge funds, right, or other hedge funds that come into the space that are, just wanting to use the interface to do a little bit of work to understand what some of the opportunities are, and that might be like a $30,000 or $50,000 a year type of user. And then there's also, like, of course, tons of people trading $1 million of their own crypto at home at their desk with 5 screens, and maybe that's a $5,000 or $10,000 a year type user. Each one will have slightly different functionality, but a lot of the underlying data that powers each one of those solutions is similar. It's just all about how you cut it, what level of granularity, how much data, and then how much functionality. And so you build that over time. The market tends to tell you. If you're an enterprise SaaS kind of builder, you start to get feedback really early from the market, and you figure out what makes sense for each tier and how much approximately the market will allow you to charge them for that. So it's an iterative process. One more.
Thank you for settling here in Colorado, but San Diego's a nice place. How did you decide to come here?
Yeah, so I sold Brightscope in November of 16, and I never imagined I'd leave California until I paid California state income tax for the full year 16. And then I realized, like, the challenges I was going to have if I did this once or twice more. And I could have bought a house here in cash for just the savings if I lived here. And my now wife was from here. I used to train for ultra marathons in Boulder, so I'd fly out for like 4 days, run up and down the Flatirons all day, and then eat, and then stay at the Boulderado or the other one, the St. Julian. And so I've always loved Colorado. The people are nicer here. The weather actually isn't that bad. And if you've lived in San Diego for 36 years, to be honest, like, it's time for a change. Like, I knew every restaurant, I knew the whole business community. I was just kind of getting bored. And then one last thing that's really important. So Colorado is a much better place if you travel once or twice a week, as I do. So going to New York from San Diego was starting to kill me. I was going twice a month. You take off at 7:45 a.m. You land at 4 p.m. You land at JFK because that's the only place to fly direct, which is 2 hours in traffic from the city. So you're still late for your 6 o'clock dinner, right? Whereas here you can fly direct to 3 airports in New York like 6 or 7 times a day. I can leave at the same time and get there for a late lunch, right? I have my full choice of different airports, and that's just New York, right? Every other city too, anywhere between here and New York is much easier to get to. So I think Denver is an truly incredible place to build a company, and we're looking forward to building, a big one here. I mean, essentially, I've told my investors already, this is the last time you get to invest in me as a software entrepreneur, because after this, I'm retiring to become an investor. I do a lot of investing on the side, so if anybody's raising for an early stage round, I'm always interested in seeing decks. But this will be my last time being a CEO of a software company, however long it takes, 5 years, 7 years, 10 years, and then I'll be just investing in stuff. So thank you very much. Appreciate it.
Thank you, Mike. Thank you. Excellent.